Well, we're back with you, keeping an eye on what's going on in your ag commodity trade. We're going to welcome a little extra expert help this time from Chris Swift of Swift Trading Incorporated, and he is based in Nashville. Good to have you with us here, Chris. Glad you survived through the weekend. Things finally warmed up a little bit. Let's talk about the markets and see if they're going to warm up. Let's look first at our corn trade, and this morning we are higher with the March corn now 4 1/4 higher. We're at $5.47 per bushel. New crop December 6.5 higher at $4.66.5 per bushel. There was some talk over the last few days that maybe after the Lunar New Year celebrations, China may be in there actively buying corn, but we didn't see anything this morning. But the trade is higher anyway. How come?
Honestly, Marlin, I think it's just that we're sitting at the very tip top and everybody's feed needs are exaggerated. So here in the U.S. with the hard winter, we're going to have a heavier pull on corn. And, of course, the domestic side, the export side of it, we still have seen nothing that suggests that there's going to be a decline in those export numbers.
I wanted to take a look at the Commitment of Traders report that has come in here over the weekend. Now, they update that every Friday afternoon. And on the corn, the commodity funds are still net long by 365,785 contracts. Now, that's after they bought another 6,900 contracts last week. But it isn't really anywhere near record long levels at this point, is it?
No, there's still some way to go, but right now we have just enough of the speculative forethought that the demand for corn is still going to be really good. So I can see where the funds would like to be participating in this, and especially with the dollar going down, it has continued its downward trend. So it seems to me like it wouldn't be a bad ordeal to be long the grains, and I think that's what the funds are looking at. If you got to be long or short of them, with the demand side speaking so loudly, that seems to be the direction to be in.
On the soybean side, they actually sold 10,360 contracts last week, and they're still long at 161,410 contracts on the long side, but they lightened up on that a little bit. Let's see how the soybeans are trading this morning. And currently on the soybean futures, with our quotes here provided by Bar Chart, we have the soybeans kind of struggling a little bit. March is down 1/2 cent. We're at 13.76 1/4, making a penny lower now. May is unchanged, and September is 4 1/4 higher at 12.47 per bushel on those deferred contracts. So soybeans not getting much traction here in the early going this week.
No, and the oil, the bean oil market has continually set new contract highs. On Friday, it set another new contract high, and it's been the meal that has been slipping just a little bit, and all the meal prices have done is consolidated. So I think once you start to see China come back in again for some of those exports for their imports, I think you'll start to see the bean market move right back up again.
Okay, now on the wheat market in Chicago this morning, we have the March contract now quoted at 6.58 3/4. We're still up 8 cents on the day. And in Kansas City wheat this morning, we're up 7 1/4 on the March at 6.39 per bushel. And looking at Minneapolis spring wheat, we have March trading 6 3/4 cents higher at 6.35 1/2. We'll be back and talk more with Chris Swift, and we'll take a look at our livestock trade after the cattle on feed report when we come back. I did want to point out one thing. Don't want to leave out the cotton market because it is running away with the golden ring here today. We have March cotton 149 points higher today, and it has literally leapfrogged right over that 90-cent mark. We're now at 90.440 or 44 right now per pound. And so we have cleared that benchmark. That is very key today. We'll see if that holds or not. Now, the cattle on feed report came out Friday after the market closed, and USDA surprised a few folks when they had the placements number a little higher than expected, about 3 percentage points higher than expected. Came in at 103%. Trade was looking for 100. The on-feed number and the marketing's number were about as expected. So let's see how we're opening up here today. Live cattle trade here so far on the big board. We have the April contract 77 cents lower at 122.90 per hundredweight. On the feeder cattle market this morning, well, we have the March down 37 cents at 138.75. April down 17 at 142.50 per hundredweight. And let's go back to Chris Swift. Chris, I thought according to that report, most of the pressure would be in the feeders. It appears to be in live cattle instead. Why?
Yeah, I'm not real sure, but it's a tug of war. If you look at what kind of weights that we probably lost during this last snowstorm, and now we've got more cattle placed on feed and fewer cattle being marketed, it makes for a tug of war. So we know that we were killing somewhere between 650, 651,000 a week. We cut that down to 550 last week. So as we come back up again, and now we're going to probably have to kill more cattle in order to achieve the same amount of beef production, but it looks like we've got those cattle to kill. So again, a tug of war.
Let's look at that livestock summary. And we did wrap up the week with live cash cattle, $114 a hundredweight. So basically that hasn't budged in about 3 weeks, I believe. And dress basis sales were anywhere from 180 to 182 on the top end. And again, that really didn't move far from where we have been. Cash live hogs across the country on Friday were up $1.15, but carcass basis hogs were down 36 cents a hundredweight. So there is that. On the lean hog trade this morning, I want to take a look at how it is faring. And right now, the April contract is just 15 cents higher. Not doing too much at all. Higher across the board by just a little bit. Last trade on April, 84.67. May is up 22 at 87.62. Good to talk with you, Chris. Thanks for the help this morning. Chris Swift of Swift Trading Incorporated, based in Nashville. Janet, back to you.